This is Greg Michaelowski, and this is a New York Morning Technical Review for FX Street for Tuesday, September 14, 2010. Taking a look at the hourly chart in the Euro versus US dollar. If I were to take this high going back to August 6th down to the low on August 24th, 38.2% retracement comes in at 128.71. That's going to be a key technical level on the upside here today. If the market's able to break through that level on the top side, I think we have further potential to move to the move in that direction. The problem is this 129.17 level continues to be a key level of resistance for the euro versus US dollar, really all the way up to 31, which was this high going back to August 12th. We have a high here, we have a high here, we have a high here, we have a high here at 09, just short of the 129.17 level. We need to get through these levels on the top side in order to extend the trading range that it's been in, one of the most narrow trading ranges in the last couple of years. 344 pips from the high to the low over a month's trading time. We're due for a move to the outside, to extension to the outside of one of these, either to the top side or to the downside. But until it gets there, folks, we ain't going there. Right now, the market seems very comfortable with selling against these highs, buying against these lows, and that's what we're seeing here on almost a day-to-day basis here. On the downside here for the euro versus US dollar, the key levels that I'm going to be watching here is this trend line to connect these lows here off of the euro versus US dollar going back to August or September 10th, September 13th, and the trend line comes in around the 1819 level here in the euro versus US dollar. Below that is a 38.2% retracement of that same move. We're going to need to get through that 128.07 level on the downside, but today the move to the downside hasn't even really approached that 38.2% retracement. We had a nice trend move to the upside yesterday. Today consolidating with a little negative bias here, but so we have a little bit of a negative off of the a negative off of the fact that we're below the 100 and 200 bar moving average, but the correction is somewhat weak here for the euro versus US dollar. So things are looking okay. We get above this 71 level, get above these 100 and 200 bar moving averages, and we got to see the markets, see how the market reacts toward the 129.17 level in order to push in that direction. Move below this 18 level, move below the 07 level, and things are looking a little bit more dicey to the downside for the euro versus US dollar. Let's go to the pound versus US dollar. Over the last 11 trading days, the market has traded above and below this green line. That's our 200-day moving average. That level currently comes in at the 153.88 level on the last hourly bar. The market went down to that level. You can see it right here, 153.88, and the market bounced off of it, off of this hourly chart. You can see the up and down action here, really quite extraordinary here for the sterling versus US dollar. But if you take out and you look at the this channel here, we've gone up and tested this area around 5 different times here for the sterling versus US dollar. The other thing of note here is, if I zoom in here, is this 154.87 level high. We broke through it. We sold through it. We used it as a high yesterday. That's going to be a key level on the top side for the sterling versus US dollar as well. But until that we still have to get through the high for the day at 154.40 level in order to push that market to the upside. So that's the level we're going to be watching on the top side. Also get through this 100, back to this 200, back to this 100-hour moving average on the top side. So we know 87.88 is our key level on the downside. Get through the 154.22 level brings us up to getting through the 40 level on the top side. Gets us to testing the 87 level, this top ceiling level for the sterling versus US dollar. Let's go to the Japanese yen. This currency pair obviously continued its sell-off last night. We went down to made new lows for the Japanese yen here, and reaching the low of 83.07. There was good support off of this bottom trend line here, connecting this low, connecting that low, connecting this low. They're all lining up, folks, and that level comes in at the 87 level, or 83 level at this point. The market came down to 83. 83.07 and bounced higher. On the top side, we're going to be watching the 83.46 level. Get through 46, we could see the market move a little bit more higher. We're unable to get through the 46 level. Rotate back down. We got to get through this trend line, and the downside currently comes in at 82.98. I expect good support against that big figure, though. So look for buyers on dips in the dollar versus yen. The dollar versus Swiss went below the parity level here today. You can see that more closely off the hourly chart and 5-minute chart. Market went to 99.98 and started to move back to the upside. We do have this par 60 level on the top side, which is was a floor here that we're going to have to get through on the top side in order to push the market in that direction. Also, we have this other floor here at the par 71 level. You can see how low here, low, 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 break, boom, boom, there we go. We are testing the 200 bar moving average on the 5-minute chart. We're just going up to that point right here, and looks like we're having some congestion problems here. Look for support at the par 29 level. That's 100 bar moving average on the 5-minute chart. We break through that level, could the parity level could be under pressure once again for the dollar versus Swiss. So there you have it. A look at the 4 major currency pairs here: the euro, the sterling versus US dollar, the dollar versus yen, and the dollar versus Swiss franc. In our morning report here for FX Street. This is Greg Mikulowski from FXDD. Bye-bye. Have a great day of trading.